The ride-sharing giant reaching $45 a share earlier today, matching its IPO price finally from back in 2019. The move back to the milestone is due in part to the 81% gain for Uber year to date. So what is behind its rise? Can it keep going from here? Let's bring in the former chief business officer at Uber, Emil, for more. Emil, thank you for joining us. You were part of Uber 1.0, and you've been pretty critical of its CEO, Dara Khosrowshahi. You're changing your tune now. You're actually bullish all of a sudden, right?
I am bullish. The major thing that's happened that's really driven the stock price action this year, in my opinion, is the demise of Lyft as a really formidable competitor. Sort of like managing the decline of the Soviet Union. That sort of happened. And the rideshare wars, in my view, in the U.S. are over. And Uber won. And that's really contributing to the potential for this company and this stock.
What does winning mean? Do we see this company continue to move higher? When you were there, Uber was doing some other things. You had your fingers in autonomous driving, scooters, food delivery, which it's still doing. But does Uber have more room to go now? And is ride sharing as disruptive as you once thought it would be?
Well, I didn't have nothing to do with the scooter thing, but I was proud of what we did with Uber Eats. And even though Uber Eats is #2 in the U.S., that market's still growing really fast. But back to the rideshare question, the reason rideshare will continue, I think, to drive the stock price higher is that there's a network effect to it. The more drivers you have on the road, the more riders can avail themselves of Uber services. The shorter the wait times, the lower the price the company can offer. And that flywheel means that they're going to keep growing market share in most cities in the U.S., if not the world. And that engine is pretty powerful and profitable for this company. So I see it going higher, and I'm a holder right now.
Under Uber 1.0, we saw Uber go into many different markets and burn a lot of cash in some of those markets over the years. But under Dara Khosrowshahi's leadership, it sort of retreated. What happens now? Do you think that now that they're generating cash, getting to profitability, they go back out?
I mean, I think that actually there's still further cutting to do. I think the grocery business, they paid $1.5 billion for this company called Corner Shop. I just don't think it's going to be competitive against Instacart. I think the company still is bloated at 35,000 employees. I actually think that they can make more profits by doing less than they're doing today. So it's sort of a reversal from the zero interest rate environment where it was free to invest in everything, including autonomous vehicles. And now it's back to the future, which the core business works. Food delivery works, so make sure you're doubling down on those and cut out the extraneous and get a year, get to profitability, that $5 billion target that Tara had a year earlier. How about that? That'll drive the stock.
So Uber and some of the other gig economies were built during that area of low interest rates and hyper growth or blitz scaling, right? And I think this is interesting. You say that Lyft's demise means that strategy actually worked, and you can see that across other sectors.
Yes, for sure. And there's been a lot of critics of hyper growth because of the amount of money that was spent growing during those times. The reality is, though, without that growth, Uber wouldn't have been in 100 countries and doing food delivery in 70 countries. They'd be doing what Lyft did, which is not take advantage of that environment, focusing on one product and one market with no durability. So I think that worked. The whole idea of blitzscaling worked for Airbnb. It worked for Uber, and I think you're going to see it work in the crypto space. I think Coinbase is going to come out a big winner relative to all the other exchanges, especially given what's happening to Binance now. So I think you're going to see that separation between 1 and 2 continue throughout tech.
That's fascinating because I think, over the last few years, folks have been wondering what was all that money for. But you start to see some of them reach a certain level of profitability. Emil, last question for you. What happens to Lyft from here?
I think it becomes what I call an orphaned company. It doesn't have a natural acquirer, General Motors or Waymo, the Waymo part of Google, or Tesla. Just not an interesting business for them at all. And so then you have to, if I were the CEO, I would sort of be retreating to the markets where I have decent market share, particularly on the West Coast. Let's say they're 30, 40% market share in San Francisco, LA, Seattle. try to get those to 50%, so then you get those economies of scale and that flywheel I was talking about, and get out of the other markets and focus and just be a smaller, profitable company.